Hi, it's Adam Hancock here from Stocks Happening in Singapore. Now, things are bad in America at the moment. Mass protests on the street, racial inequality rearing its ugly head again, scenes of police brutality. Add into the mix mass unemployment, and of course the coronavirus pandemic, which, by the way, that's not gone away, and things are pretty bad. So you'd expect the markets to be tanking, right? Well, no, take a look at this. All of the major US averages were up yesterday. So why is this? Well, first of all, the markets don't have a heart. They don't have emotions. They are purely ruthless money-making machines. Okay, the investors involved in them, yes, they have a heart, they have feelings, they have emotion, but they're using the markets simply to make money. As much as we may want the markets to speak for us or represent the nation, they don't. That's not how they work. They are just mechanisms to make money. Another reason is because investing is generally with a long-term view. People are trying to predict the future. They're trying to guess what's going to be popular in the future. They're trying to guess what might not be so popular in the future. So a lot of stuff that is happening now isn't really going to affect things. It's only major things that are going to affect the future. For example, stay-at-home stocks are surging right now. That's because people are predicting that we're going to change the way we work. We're going to be at home a lot more. We're going to work from home a lot more. There could be a second wave of coronavirus, so we could be locked down again and at home for much longer. So people are using that to predict the future. And that brings us on to the third point. There's generally a main focus with the markets. And right now, the main focus is on if the economy is going to reopen after the coronavirus lockdowns around the world. Investors are trying to work out if consumers are going to have the confidence to go out and spend. Are things like hospitality and tourism going to start up again? Is life going to return to how we once knew it? That's the main focus. And unfortunately, as important as the George Floyd story is, it doesn't really have enough long-term even, economic impact to really be affecting things. At the moment, things like news of a potential vaccine or big statements from banks or economic organizations, they're affecting the markets because they relate to the story, which is the main focus, which is the reopening of the economy. So to summarize why the markets aren't crashing right now because of the violence in America, well, firstly, markets don't have emotion. That's just simply not how they work. Secondly, everything is mainly looking to the long term and the future. And thirdly, there's a main market focus. And right now, this story isn't it. I hope you enjoyed the video. If you liked what you saw, please subscribe and drop us a comment as well.